Like I said, last year, 70,000. This year, we're on track for 80,000. We're on track to have back-to-back record-breaking years for the SBA 7A program.
Wow. So 80,000 small businesses have received funding.
You can double your business overnight with $0 down through an acquisition
Wow.
if you can find the deal.
What are some of the basics that you find across the board, whether they're just starting out or they want $10,000 to those who want 5 million? An SBA loan, is this really an option for new business owners, or is this something for somebody who's been in business for, let's say, 10 years?
Well, I would say 70,000 businesses would say yes. It was a true source of capital last year, which was up. Previous year was closer to 58,000 loans through, and I'm talking about the SBA 7A program, by the way, that's the flagship. That's the main program. So, typically, historically, it's like 50K different loans going out every year. But that's on the up and up. I mean, like I said, last year, 70,000. This year, we're on track for 80,000. And so we're on track to have back-to-back record-breaking years for the SBA 7A program.
Wow. So 80,000 small businesses have received funding through the 7A program. And based on my limited understanding, because you are the expert, you are SBA Ray, what about the person who literally just got an LLC or just got a sole proprietorship? They may not even know what they want to sell, let alone if government contracting is even the answer for them. Are there real options for them through the SBA?
Well, it's a good question because, there are the 7A program does cover a lot of things. And the number one sort of segment of these loans are to existing businesses. So people already having the 2 years of performance under their belt and they want to grow, they want to buy a building, maybe they want to buy out their partner, inventory. I mean, it's a very pliable loan. You can do so many different things and you can combine those uses. But there's also startups. Startups is the second. It's not at the level of the existing business loans, but it is right there. And these startups, I would break down into franchise and then independent. Okay. So a lot of people looking at, watching this probably in the independent space, they're, in a total startup business. They had an idea, they started a business. That's a little trickier because with the franchise model that a lot of the SBA lenders are leaning into, those franchises like the Orange Theories, the Crumbles, things like that, they have some performance metrics that they publish in their FDD every year, which the SBA lenders can then use to validate their projections and assumptions and business plan. But when you're just an independent, the SBA lender, all they have to go off of is what you put in your business plan projections and assumptions. So that tends to be a little riskier. That lending is there, but those lenders, for the most part, especially depending on the amount of loan you're talking about, because we go up to 5 million, they may be looking for some additional strengths behind just the idea and the business plan and the projections.
Which makes sense since the SBA is taking on all this risk.
Well, that's right. I mean, their shared risk with the bank and with the SBA. So let's be clear, like the SBA loans, and again, we're talking about the 7A, that's the main program. And there's a bunch of different programs, but the SBA 7A eclipses all of them by a lot. That program is done through the banks, credit unions, and a few non-bank lenders, and they share the risk with SBA. So 25% on risk on the lender, 75% risk on the SBA. So the banks and credit unions are definitely being mindful about who they're lending money to. It's not a free money situation like, we experienced the last couple of years with some of this COVID era relief, EIDL loans, things like that. Money was getting pumped out left and right. This is more of a traditional banking type of product where you're looking at what we call the 5 C's of credit.
And can you go over those 5 C's?
I'm going to try. Let's see if I can remember them all.
It's okay.
Cash flow is number one. If I was in my other room, I have a neon sign that says cash flow is king in the background.
Oh, I love that. That's smart.
People love it because, I do a lot of business acquisitions and, by nature, you're buying the cash flow, you're buying the future cash flow of the business. But in any event, it's all about cash flow. And that is the first C. Another C is collateral. The SBA is kind of known for you don't necessarily need collateral, but it is a strength if you have it. So that is a consideration. Conditions is another one that's like more the macroeconomic. Capacity is another one. I like to say cash liquidity. That's something that people look at, because if you're starting from scratch, you're gonna probably need to put in a chunk of money as your down payment. Maybe that's 10%. And then after you put that in, how much money do you have in reserves? Are you setting yourself up to where if you hit one speed bump, you're 1 month behind on what you thought you would be? Are you going to be in a really tough financial situation, or do we have a little bit of a rainy day fund to fall back on? That's another thing people are looking at. And I'm probably diverting a little bit away from the 5 C's, but truthfully, the SBA lenders are looking for that. And then probably the number one thing is experience. Experience is critical, especially in this space when you're doing a independent startup. I would say it's in many cases required. I mean, that's one it's really hard to do a startup deal to someone who's starting a business in something they know nothing about, right?
No, that's really true. And what constitutes experience? Are you like giving your resume? What are they looking for based on your experience, SBA Ray?
You do look at the resume, and it's interesting with a startup is one aspect where, it's like you kind of want them to know what they're doing, because it's hard. Running a business is hard. Knowing the ins and outs of an industry is hard. With a franchise, not so much. You don't always need to know the industry because the franchisor is there to support you. And in the acquisition space, where you're coming in and buying an already existing profitable business, which is a very popular, movement these days. People talk about the silver tsunami, all these baby boomers retiring, selling their businesses. They make money. You're going and you're paying for those businesses, and those are getting done with SBA loans. And those are another instance where you don't necessarily need to know how to run that particular business. If you did, you probably start it yourself anyway. But you do need some transferable skills in those cases, like knowing how to manage people, knowing how to manage a P&L or a budget, things like that. So yeah, we're going into the resume and we're looking at what you have that is relevant and can transfer over. I like, military backgrounds are really good fits for a lot of these types of businesses. We do a lot of lending to veterans, and so on.
Have you found that through this age of Doge, the Department of Government Efficiency, that there's a decrease in SBA loans, that they're not looking to lend to women? I've heard all kinds of interesting things stated around Doge and SBA and federal government contracting. So I'm just sharing what some have stated. But what have you seen, SBA Ray, based on your experience in this realm?
Well, first, before we talk about where we're going, you have to remember where we've been. The SBA has been pretty steady for many years. It was never a political program. In fact, it wasn't until 10 under Obama where the SBA became a cabinet position. And fast forward to 2020, PPP enters the equation. All of a sudden, the economy is on the brink of a complete collapse.
Yes.
And we are headed into the worst financial situation the world has ever seen in maybe ever, unless we can keep some businesses afloat that had to close down. And so all of a sudden, we're pumping out money through the SBA within 2 weeks, having to build this system where more money had to get funded there within a couple of months than we had done in 10 years total. We knew there would be fraud, but it was a matter of every single day businesses were closing permanently, and it was going to be unreversible damage or irreversible damage. So now fast forward a few years later, there's fraud. Everyone's up in arms. Oh my God, look at all this fraud. Well, we knew now it was excessive. There was more fraud on the EIDL side. That was where we saw the most fraud. That happens to be the loans that the SBA did directly. A lot of blame going around. All of it. So the last, I would say 2020 to 2024 has been kind of nuts. And in 2023, that's where we saw sweeping changes. And I did a video, you can go to my page, there's a video, SBA Ray YouTube channel, and it goes over all these sweeping changes. And I've never seen these types of major changes. I mean, really rules that were just for years, forever, and they switched it up on us, and it was basically seen in a positive light by business owners because it's more flexibility, more access to capital. But now we're seeing sort of like this come to an end because the defaults are up and they didn't forget, but they weren't charging fees for many years as a like extended relief. The fee in the SBA loan, called the guarantee fee, that's what pays for the program for the most part. That's like a big piece of revenue coming to the SBA. The way the SBA operates, it pays for itself. There's fees and there's losses and it balances out, and we have to operate in a zero subsidy environment, and we don't think that's happening right now today. And now, because of that, they're saying, oh, all of these things they did under the last administration caused this. Now, spoiler alert, I don't think that's the case because it's too soon for that. I think the interest rates and a few other factors had a lot more to play. In fact, I know that's what happened, but it's a little bit of political football right now. And so they're saying we need to basically reverse everything that we were doing. So DOGE is coming in. The first thing they did was some layoffs. That's just a theme for the whole thing. Now, I would argue that the part of the SBA that I know probably couldn't afford some layoffs. I mean, they literally lay people off and now there's things in standstill. Now, it's not stuff that should affect most people, but if you were sending, there's some departments in there where sometimes the SBA needs to come in and look at something. It's not on every deal. If you're working with a preferred lender, that's not the case. But like, long story short, there is a little bit of disruption in the SBA, but it's not crazy right now. We don't really notice it, but it is, I mean, they operate pretty lean, honestly, in the part that I know, but they made cuts there. And that's really some of the first impact that we saw. And then the other thing we saw was a policy notice that came out. So this was the first actual policy where it's affecting the lending. And essentially it said, if you're a business and you have any owners who are not US citizens or green card holders, so someone here on a visa, so you have someone here on a visa, they own 10% of the business is no longer eligible for SBA financing. That's a big change from where we were. It used to be 51% owned by a US citizen or legal permanent resident. Now it's got to be 100%. I literally have deals in my pipeline today that don't qualify anymore. I've done deals in the past that don't qualify anymore because people have come here. Maybe they bought a business and they're just investing or helping out someone else with a down payment or something. And so they want to take a little bit of a stake in the business. That's off the table now. And I just think that's just the first of a lot more to come.
And wow, this is amazing. This is great information because I know that the change around citizenship just happened. There's this big movement, as with many of the agencies, to bring SBA employees back to the office, as well as move or close offices in sanctuary cities. And this is all around the SBA. How did you get into this space, Ray? Like, how did you become SBA Ray?
Yeah. So I fell into it, as many people would say in my industry, from college, internship at a lender who is doing SBA 504 lending, which is another form of SBA lending more focused on commercial real estate. And so I was, 22 and I was just learning it and I just fell in love with it. I mean, you get to really feel an impact in what you're doing. And that was 13, 14 years ago. And I haven't looked back since. So now I'm on the 7A side. That's where I've been for over a decade. I'm actually the managing director at a SBA program at True Liant Federal Credit Union, which is a credit union in North Carolina. We lend nationally, and we're up to about 27 people in our division. We're actually the number one credit union in the country for 7A lending.
Oh, wow.
And I just saw today, we were just named number one mover and shaker of 2024 in the SBA industry because we're ramping up big time. So all good stuff going on here, but that's pretty much the gist of it.
That's amazing. And for instance, can someone apply for an SBA loan through you or through that bank if they don't live in that area, if they don't bank with that credit union, or they don't bank with the lender, or the lender's not a bank? Can you break that down for everyone?
Yeah, and yes, because we're in about 3 states, but we lend in all 50 for the SBA side specifically. Our folks are all remote. I'm in Florida. We've got team members all over the country, Texas, Utah, New York, you name it. And our model is to bring in SBA experts, which are called business development officers in our industry. And those folks come with their own relationships. And That's how we source our business. So I work with, loan brokers. I work with other bankers that can't get these types of deals done, because we all have our own niches. Ours is, we're heavy in the acquisition space. And then also like you said, I have a YouTube channel, and I've actually closed multi-million-dollar loans to my YouTube subscribers, which has been amazing.
Well, I have to say it makes sense, because some have said, especially when it comes to an SBA loan, it's almost like a marriage. So they're getting to know you. I mean, this isn't just a hard money loan. You can go somewhere, pay an insane amount, or ask a family member, friend, or take money off of a credit card, and it's a transaction. I know, at least from what I've run across and what some of our coaching students have said, and just those who follow, it's more of like a long-term relationship. It's like a marriage. So being able to learn about you, learn more about the SBA through your channel is amazing. And that's why I wanted you here. And I asked those who are watching not only to like, subscribe, and hit the notification button for my channel, but check out SBA Ray's channel, because there are so many myths around SBA lending. And I'm just so grateful to you for being here to dispel a lot of these. Because I know I came across this situation, and I would love your insight on this. A woman contacted me that she received an SBA loan, and the interest rate, in her opinion, is very high. I think she went through a lender, and now she has to repay it. What can people do in those situations where they have an SBA loan, they're at this, oh no, now I got to pay maybe an amount they didn't expect? Are there options for people like that?
Well, that's a good question. And I want to go back to what you said, because you're absolutely right about the marriage thing, by the way, because, not only are you in the trenches with the lender every day for several months, this is depending on the type of transaction, it doesn't involve construction, doesn't involve getting permits. Like a business acquisition takes 60 to 90 days on average. So you're in the trenches. So like I was just talking to one of our BDOs up in Syracuse, and his client who he just had a baby, and he had just closed a deal for him about a month prior, and he got a baby picture. How many of us are texting our hard money lenders baby pictures from the hospital or whatever? And then I had another guy. I closed a $4 million former NFL player, great guy. Wow. And he bought a logistics company. Well, he was in the real estate, and then you want to get into business. It's more, real estate's tough. Business is tough too, but at least the cash flow is a lot stronger. Mm-hmm. So he was like, we talk every day for several months, and then he buys a business. Now he's running the business. Something happens. He's like, oh, I need to call Ray, but we're not doing the loan anymore. What do I do? Like, you just get in these habits of working so closely with your lender. But like you were saying, that is not good if that happens. Like, if you didn't realize what your payment was going to be, it's a faux pas. I would say. Now, I will say, if you go back to 2021 and 2020 and you were getting these loans, these are mostly variable rate loans, meaning if the interest rates move, and at that time they were as low as they could go, so you can only go one way, up.
On up.
So those people got crushed because the rates went up 525 basis points, which is fancy talk for 5.25%, within 18 months, which means your payment went up like 30%, which nobody was prepared for. And those people got crushed. And ultimately, lenders in those cases did offer, every lender can offer whatever concession they want. Most commonly, it's a deferment. And it's not even that strong of a deferment. It's like hey, we'll defer principal on your payment for the 90 days so you can catch up. But it really doesn't help a whole lot, to be honest with you, because it's mostly interest at that point. So it's tough. I would say really read your loan documents and really pro forma out what the path to repayment is. You should really, this is a fully personally guaranteed loan, not something you really want to just jump into all willy-nilly.
Are these loans that can be refinanced?
Well, yeah, technically yes, but I will say like an SBA loan is there because the whole point of the program is to be able to provide access to capital for businesses that wouldn't have otherwise had it, and with terms that are reasonable. So, if you got an SBA loan, chances are you didn't have a conventional option to begin with. So, now down the road, you may get into a situation where your business can afford conventional financing. Usually, that's a situation where there's collateral, like to back it up. But most of these SBA loans are SBA loans because they don't have anywhere near enough collateral to get into conventional. So on commercial real estate, yes, I would say average lifespan. Well, the average lifespan for an SBA 7A loan is about 7 years.
Okay.
So on real estate, typically what that means is somebody's refinancing after about 6, 7, 8 years, which is totally fine because the prepayment penalty is gone after 3 years. And you should do that. A lot of my clients do that because you're if you're wanting to buy your building, you can do it with zero down with an SBA 7A loan. The
Wow.
down,
Zero down. I heard you correctly, right? Zero down.
100%, 100%.
Wow. That's
The
amazing.
downside is those interest rates are like prime plus two, which is
Okay.
today that would be 9.5% on real estate's high. But zero down is the difference. So if you have a fast growing business that can afford that type of payment, that's great. And then of course, once that building builds up some equity to where you're at 80% loan to value or something like that, slide that baby right into conventional, lower your rate by several points. It's beautiful. I've seen it work many times. But if you're buying a business for $4 million, that business might not even have any physical location at this point. I mean, we're doing digital businesses. It's rare that that's going to be able to be refinanced. But you're allowed to refinance them. Yeah.
Well, this is really good to know. This is really, really good information. What are some of the things that people overlook when it comes to SBA lending? What are some of the basics that you find across the board, whether they're just starting out or they want $10,000 to those who want 5 million?
Well, the SBA program is considered, at the top of the pyramid in terms of financing in the market. And that's because of the longer terms. You're getting 10-year terms where you'd normally get 5. You're getting 25 where you normally get 20. The SBA is known to stretch it out to help your cash. That helps your cash flow because the monthly payment's less. They also like to preserve your liquidity, so the down payment requirements are less. There's also no balloons, so you don't have to worry about a 5-year term that comes up on maturity and you've got to refinance it. That's very common in conventional world. And there's no loan covenants, meaning some conventional forms of financing have these covenants that if you trip them, you're in technical default. And, that doesn't sound good. So there's all these pluses, but there are two downsides to SBA. And number one was that interest rate that I mentioned because it is variable and it's really only a downside against conventional. It's not really a downside against a lot of other forms of financing are even more expensive, but I will point it out because a variable interest rate in certain markets is seen as unfavorable. And then number two is not only are you personally guaranteeing the loan, but, and that's for anyone who owns 20% or more personally guaranteeing the loan, but you also have to pledge all available collateral. Meaning if you own real estate, like a house, for example, you own your house, and it's got equity in it. The SBA says, well, before you take our guarantee and our taxpayer put our taxpayer dollars at risk, we want you to put everything you've got in. So you've got some equity in real estate, go ahead and pledge that towards the loan. If you don't have enough to fully secure the loan, don't worry, we'll cover you. But we want to see you put everything put everything you have in before we come in. And so I was working on a deal the other day, and sure enough, one of the partners' spouses said, "What are you talking about? Put a lien on my house?" No. Your deal could be, you could be stopped in your tracks right there just because some people just don't want to get that involved.
Wow. But it makes sense. And so if somebody doesn't want to get that involved, what do they do?
Well, I mean, in that case, you could, make buy out your partner, get rid of them. But I think it's really a matter of like understanding. This goes especially for startup entrepreneurs and people who want to buy a business, which is actually a lot easier, by the way. I mean, buying a business that's already cash flowing the lending in that space is abundant versus startups a little tougher. Startups, you got to dig a little deeper. You got to do your research. You got to subscribe to channels like this to really kind of learn the ins and outs and get in the nooks and crannies of the different tricks to get the financing. But with acquisition, lenders are tripping on themselves to get the money out. And so if you're going into business for the first time, you are all in. It's important to know that. When people do come to me and they say, how do I get out of the personal guarantee or pledging my collateral or shielding my assets? And if those are your initial questions, this might not be for you.
No, I agree. I would say it definitely isn't. It definitely isn't. And I would love to talk a little bit more about buying into a business in this space of federal government contracting, especially. It's something that I'll mention to people, especially those who are interested in starting out. You can buy an existing government contracting business, and there are those that are definitely at a bargain. So where does one go to find these businesses? Based on the clients that you've helped, where did they go? Was it a website? Was it they met someone at a networking event? How did that come about?
I think this is going to be one of the biggest takeaways here in this discussion, because this is an area that is such a no-brainer for so many businesses, and I don't think people fully understand. Now you're the expert when it comes to government contracts. I cannot claim to be an expert at all, but I've certainly done loans for people who are contracting with the government. And sometimes I come across some where it's like, this is a women-owned business, minority-owned business. And so the buyer of this business has to kind of fit that bill to continue getting those contracts, which is kind of cool. Now, where do you find them? Well, the first one that came to my mind was, someone I know, his mom met someone at a concert and they happen to be selling the business and they get connected, so you never know. It's like finding deals, right? It's networking.
Right.
Now there is a site. The most popular one by a mile is Biz Buy Sell. So Biz Buy Sell is listings for businesses, but I'm doing one deal right now, and I'm actually doing a few of these deals where you can buy your customer you can buy your customer, you can buy your vendor, you can buy your competitor, you can buy the people in your orbit. So this particular deal I'm thinking about is they manufacture something fairly niche, but they print designs on it. They do about 8 million in revenue, and they have this other company that they know, who they were they sublet some space out to them basically. And this other company does 2 million of revenue. So it's smaller. And they wanted to sell. So, perfect integration because they're both manufacturing similar things. Now they want to, all of a sudden they can cross sell their customer base with each other's products, and it creates a synergistic boom. And I've done that time and time again. It works for competitors as well. You can double your business overnight with $0 down through an acquisition.
Wow.
If you can find the deal.
Wow. And how
I
is this one also $0? Because you mentioned the one, I'm just like, how is it $0? But it makes sense though, because you're taking additional risk, if someone says, hey, I want to start this thing, in comparison to, there is this company, they're doing 2 million, or they're doing 5 million, or 200,000, or 20 million. I love that. But where does the zero come in? I know. And sometimes it's like, is it too good to be true? And for this particular deal I'm thinking of, it almost was. It's like this guy had a woodworking, whatever, I already said it, company. It was several years ago, buying another woodworking company. And so both were doing 4 million in revenue. And the one guy had some debt on the books, the buyer, some inventory debt. And it was just this thing where we did a loan that, now he put in 5% down, but we gave him working capital at closing that was in a similar amount. So let's just call that a wash. We restructured his debt to make the payments way more affordable, and we funded the acquisition. And then we also did inventory financing for additional inventory. So he actually came to the closing table, left with more money in his bank,
more inventory, a cheaper payment on his inventory debt, and his business, instead of doing 4 million, it was doing 8 million in revenue now. And that's very common. And the caveat is these are existing business owners. When I talk about the strategic acquisition, when I talk about the buying the building all with $0 down, it's because the idea of a down payment means that's your skin in the game. Well, these guys already have skin in the game because they have a business that's been going on for several years. And what I do is I look at the balance sheet. I know you all wake up every morning and study your balance sheet, right? The balance sheet is where you have equity, assets minus liabilities. That equity there, the reason you want to build that up is because that's what I look at to say, let's leverage this equity into doing these deals where you don't need to put in more equity because I'm looking at the equities right there on your balance sheet.
I'm still floored by 0 down, but it makes sense because they've put in so much into the existing business. What's the best way, Ray, that SBA Ray people can get in contact with you?
Well, you can go to the YouTube channel, SBA Ray, at SBA Ray. And then if you want to get in touch, you can go to sbaray.com and then just put in an inquiry there and we'll pick it up. Okay,
excellent. And I'm so curious, what has been like the most unusual business you funded? Like what genre? I understand that there are genres that SBA won't fund. Okay, I'm ready. We're ready.
You're not going to believe this one.
Uh-oh.
Psychic hotline.
Really?
Yeah. Yeah. They put money down, by the way, on this one. But yeah, it was actually a large acquisition of a company that essentially connected you with psychics. And I actually did a psychic reading as a sort of secret shopper when I was in the lending process. And I have to say, I'm not into any of that stuff, but I was like, it's not bad. I mean, they got like a good chunk of it right, I felt. So it was kind of interesting. But yeah, that was a unique one.
So, okay, hold on.
And that was a business acquisition. Somebody bought that business.
Right. But I remember, although I'm forever 28, I remember psychic hotlines from a while ago, you know, call me now, call this number. It was like all over. So it's the same kind of business model where you're calling someone, or is it online? Like how do you?
I was actually, I was amazed, but it was, they have it was online based, but like the psychic call that I did was like over the phone. Like, so they like link you up, send you an email and be like, hey, here's your psychic. And then basically they're going to call you at this number. And I think they did some other things too, in addition to that, but that was like their main revenue source, was essentially just connecting you with a psychic to do a phone call.
That's wow.
And by the way, they netted 1.5 million the last year I saw the numbers. Like bottom line.
At least.
Yeah.
It doesn't surprise me. I just didn't realize it was still a thing.
Yeah.
And it's kind of like postcards and people who advertise in the mail. Sometimes I forget, especially that I live full-time in Mexico, I don't get mail. I get mail where I vote in beautiful Miami Beach, but I forget about the power of mail and that it's still a thing. And there are companies crushing it, printing the stuff, mailing the stuff. And seems like there's always going to be a need for print. So, wow, this psychic one, SBA Ray, that one has really, really touched me for various reasons. So
you can only imagine all the different puns that were said on the pipeline calls every week.
They already know that they're going to get the loan.
Exactly.
Wow. Well, I can't thank you enough for being here. This is
it's my pleasure.
Been so eye-opening. And I encourage everyone, reach out to Ray, check out his channel. You're also on LinkedIn.
Mm-hmm.
Check it out. Definitely check it out. Don't overlook acquiring a business. I mean, I'm sincerely inspired by this. So if I take this path, y'all, you know I will document it. Also, like, subscribe, hit the notification button for my channel. Check out the book, winnerswaybook.com. Check that out. What I would love for all of you who made it this far is just comment below. What was your biggest takeaway? What was your biggest takeaway? And you write your biggest takeaway. I'm also going to give you a signed copy of the book. That's just how inspired I am today. So write your biggest takeaway, write free book with it, and I'll my team send you a free book. So goodness gracious, Ray, this is amazing. And I will say before I close, you provided so much hope, and I can't thank you enough. And so everyone, everything is possible all the time. Like, subscribe, hit that notification button. And until next time, take care.